So Gordy and I want to visit with you about the S Corp versus Schedule C. And I want you to note that either one of these can be an LLC. So when you ask what should I do related to an LLC and say things about being an LLC, that's for legal purposes only, has nothing to do with taxes. So in electing to be an S Corp versus a Schedule C, what's the big deal? Well, the big deal is something called self-employment taxes. And, this is a big one for realtors. And for realtors, you really get into this when you're getting this 1099 income, because when that income comes into play, it comes on a 1099 NEC, which means that it should be subject to what's called SE tax. Well, what's the big deal on that? Well, SE tax, okay, is in addition to, so you add it, it's a plus, it's in addition, okay, trying to really make this clear to you, but it's in addition to taxes, okay, so one tax, two tax. And what is that self-employment tax? Well, on Schedule C, okay, I'm going to do a red line here on Schedule C, that is subject to self-employment tax. The net income from an S, not subject to self-employment tax. So I don't know that you got to be a genius just to know that's subject to two taxes, that's subject to one tax. Well, self-employment tax is 15.3%. So let's just say that you net $100,000, okay? So there's a lot of figures to it, and those that know how all this works, we know we've got QBI, we've got half of the self-employment tax on Schedule 1, right? All kinds of different things. We know that an S Corp's got wages. We know that a Schedule C might have a home office different than that. Yada, 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 yada. Okay? So let's just really get down to brass tacks. And yes, there's all these other things to it. But if you were to net $100,000 on your business, okay, for the S Corp, okay, zero. I don't know why people get mad when you show this to you. It pays zero self-employment tax. You net $100,000 on a Schedule C, and this is just self-employment taxes. $15,300. Let me put a dollar sign with that. That's just self-employment taxes. Now, I've got a little schedule that I'll give you a link to. And so with that, I've done this calculation that if we have a single filer, no other exceptions, no dependents, yada, 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 with the QBI and the wages and all that good stuff, okay? So the regular income tax, because remember there's two levels of tax, the regular income tax for an S Corp, okay, not corporate tax. This is why you shouldn't do any of this stuff by yourself. But the regular tax is regular tax is $11,892, okay? And the regular tax, yep, because of these minor differences, is actually a little less when we're talking about a Schedule C. But your total tax is $11,892. Well, your regular tax plus your self-employment tax here, we'll do some old-fashioned arithmetic, okay? $11,892 versus $24,992. Why? What's the difference? Self-employment tax. Now, let's say you go, oh, but there's wages. But see, on wages, you're going to pay Social Security and Medicare, employer, employee, you're going to have a match, blah, 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 blah. And on wages, there's a 15.3% tax, not showing up on your Form 1040. See, this is on your Form 1040, okay? There's no corporate tax here. This is all on your 1120S down to your individual. So individual, your tax is 11,892 versus 24,992. Okay? I mean, it seems obvious. Now, yes, if we were to do self-employment tax versus payroll tax, the difference is that on the payroll tax, I get to choose what dollar amount I want it to be with versus just being on the railroad track and it's just whatever the net is. And there are some special exceptions for realtors, which I do cover in my seminar. I've got a link to it. But let's just say for grins, and people are going to lose their minds over this, and it just depends on where you're coming from. But all I'm going to do to make this easy is that for every 10,000 of wages, you pay 1,530 of payroll tax, and that's Social Security and Medicare, employee and employer portion, 15.3%. So 1,530. So if you paid yourself 10,000 in wages, which you wouldn't be able to get away with really, but if you then did 30,000, well, maybe that's 4,530. All I'm saying is that even if you did 50 grand, it's going to be less than that. Okay. So do you want to make sure that you're subject to the right things and it's a fit? Heck yeah. So check out my other videos, but you got to get a tax advisor. Okay. How do you know you're working with a good tax advisor? Ask them, say, hey, if I was netting 100 grand, what structure would you recommend? And if they say LLC, then you need to run because they really don't know what they're talking about. Because an LLC can be taxed as an S Corp, a Schedule C. An LLC can be taxed as a partnership, a C Corp. An LLC is a chameleon. So if they say tax it as an LLC, run. Now, if they were to say, oh, you just want to be self-employed, you just want to be a Schedule C, say, okay. Say, real quick though, would it make sense to be an S Corp? And if they say no, you're not going to really save any tax, this, and this. Really, that's code for they don't think you want to pay for their fees. That's code for they don't believe you are mature enough or disciplined enough to actually do all the things you've got to do to be an S Corp, or they just literally don't know what they're talking about because you're there to save tax. I mean, that's my role. So when I'm talking to clients, I'm going to run through the scenario. I'm going to run through the math. I'm going to run through their payroll. But they always come out ahead. So for those that are tax professionals, check out the worksheet. Go pick it apart. Have fun. I guess you will see that I've taken into account everything, and with 50,000 in wages, and you still come out ahead, $5,000. So the other argument against it is, well, if you're not paying in self-employment tax, you must be too dumb. Okay, I'm sorry, tax advisors, this is what they say. Well, my clients are too dumb to set aside any money for retirement. So if they don't have money into Social Security and Medicare, then they're not going to have any money to retire. Okay, yeah, I mentioned that to my clients as well, but we're still going to pay in Social Security and Medicare on wages. So I'm not really sure what the animosity is. So if you have a tax advisor and they're saying, nope, you shouldn't be an S Corp, you can't be an S Corp. If you have somebody saying, oh, Realtors don't qualify as an S Corp, run. Okay, they literally are dumb. They're dumb, okay, at least when it comes to taxes. If they say, oh, you just want to be a Schedule C, maybe when you're netting $250,000, run, okay? So all I want you to know here is that you've got to hire a professional. There's a number of things to this. I've got other videos. I got a seminar. Then what are those things? Well, with an S Corp, yeah, you got to set up an entity to be an S Corp. You can't just be an S Corp. You got to be an entity. Well, you got to set up the entity. Then you got to elect it to be an S Corp. You got to have an EIN. You got to do payroll. You got to have a separate bank account. You got to do QuickBooks. Well, if a client's going to do that, okay, because they need to do all those things, then clearly they're not making any money, or they don't understand anything about taxes because they have never had anybody basically explain how it works. But we just don't work with clients, and we're not taking on new clients outside of Oklahoma, and I guarantee you're not listening out if you're in my hometown, most likely. But my point is we don't take clients on that whine. So a tax advisor that says no, well, they just think you're going to be a crybaby. And you're going to be like, oh, I have to do that. I have to have a separate bank account. And oh my gosh, it's so hard. I have to do payroll and I have to do QuickBooks. Good job. then go ahead and pay the extra $15,300. Okay. And, you know, more power to you. Great. Yeah. You probably live longer, I guess. But I don't know about you, but when you want to pay less tax, okay, even if we take in all this, when you want to pay $5 grand less a year, you know, over 10 years, that's 50 grand. Well, you got to pay you got to pay your advisor, and you got to do this and got to do that. Okay, I don't get it. I don't get it at all. Gordy, do you get it? I don't know. I think Gordy would say, listen, if there's a chance to save tax, why wouldn't you do it? And yeah, if you got to go through some hoops and you don't want to do that, no problem. Then what you're saying is it's not worth 15 grand. And that might be the case. You're just that big time. But I want you to think of this. What if you're netting 200? What if you're netting 300? Yep, there's some max to it, but you still have at least Medicare taxes and then maybe catch up related to that. So, Gordy, let me ask you a quick question. Do you think people should be an S Corp if it makes sense for them and they shouldn't whine about doing payroll and stuff? Yeah? Okay. Well, Gordy's 8 weeks old. I will plan for Gordy to be one of the smartest Frenchies or possibly of any dog in the world when we're all said and done. And, you know, maybe it just was a little more fun, you know, to watch this because I was holding a dog. So this is my first video with Gordy. And bottom line is if you don't like Gordy, please don't leave a message and tell me that, because that probably means there's probably something wrong with you. I'm having fun with you. All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget. Mwah. How you doing? Thanks for listening. Mwah. You want to tell everybody? Yeah? Okay. Gordy's going to tell you as well. Don't you ever forget, you've never met a Frenchie quite like Gordy. It's a girl, Gordie, and you've never met a CPA quite like me, clearly. All right. Hey, we'll see ya. Hope this helps. Go save you some tax. Good job, Gordy. Good job, sweetie.